10-year note yields end the week nudging lower, getting down to 462, down about 2 basis points on the session. Again, not a very busy economic data day, but ultimately the market, always forward-looking, has a very busy week next week. Now, taking a step back, since CPI earlier in the month, we've seen yields move down about 20 basis points, but have been sort of stuck at this 460 level, sort of waiting for that next catalyst event or piece of news or whatever it is that's going to move the market, and ultimately seeing yields hover on this level for most of the week. Again, seeing yields close slightly lower today at 462, down 2 basis points from Thursday's close. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll see volatility, which was higher to start the week, has made some pretty big moves lower throughout the week. Now, today it settled very close to unchanged, however, much lower from last Friday's settle. Lastly, let's talk about next week. We do have a very busy calendar next week. Ultimately, the market will be watching for FOMC on Wednesday. We do have an ECB meeting on Thursday. Likewise, we get a fourth quarter GDP on Thursday. And then on Friday, we get the Fed's preferred inflation gauge in the PCE data. So a lot going on. And on top of that, we have several auctions, including a 2, 5, and 7-year, as well as a 2-year floating rate auction. So a lot of issuance on top of the fact that we have a very busy news week. So Treasury yields moving lower to end the week, seeing 10-year close out at 462, down 2 basis points ahead of next week's slew of auctions, FOMC, fourth quarter GDP, and the PCE data.